I'm Charlie Doherty, economist with Wells Fargo Securities. And joining me today for a special discussion on commercial real estate is Wells Fargo Securities senior economist Mark Vittner. Mark, so economic growth is ramping up as more progress gets made on vaccinations and COVID risks decline. Now, retail stands to benefit greatly from the anticipated surge in consumer spending that we're expecting this year. But where's the retail market headed longer term?
Well, I think we're really going to see a very useful test run in retailing right now. We're seeing that which stores are best positioned and which ones aren't. Because if you can't sell something in the current environment where consumers have all this money, then you know that that's a location that's going to have some serious trouble once the stimulus winds down. But right now, we are seeing that retailing is doing very well. They're dealing with some of the supply chain disruptions that are affecting the broader economy, and some stores are running short of stock. But this will pass. We're already beginning to see in the last few weeks a shift away from goods purchases towards services purchases, and that's real good for shopping centers that had focused on activities as opposed to retail stores. The experiential retailers are seeing their business come back, particularly restaurants, but also fitness studios and health spas and things of that sort are doing much better. Longer term, though, the shift to online retailing, it's very real, and we are going to see that bricks and mortar retailers will continue to lose market share to online competitors.
Yeah, you just mentioned the rise of e-commerce and online sales, which is giving a boost to the industrial market. But businesses are also shortening supply chains and holding on to more inventory, which is also fueling demand for warehouses and distribution facilities. So do you see the industrial market as a long-term source of growth?
Well, it certainly looks that way. The industrial market's got a lot more going for it now than it did pre-pandemic. Pre-pandemic, the market was very tight, particularly in the last mile distribution facilities that are involved in providing that last mile of distribution, and also at the port. The port, anything around the port was booked solid, and today industrial space around major port facilities is even tighter supply than it was pre-pandemic. And now you add to the mix that all throughout the distribution channel, folks are looking to build a little more redundancy, a little more resiliency into their supply chains. And so folks are wanting to carry a little bit more inventory than they did previously. And that's got a long way to run because inventories are still exceptionally lean right now. And so not only are we going to see that demand remains strong from a cyclical standpoint, but we've got a further structural shift toward more industrial space as more folks need to build more resiliency into their supply chain.
Yeah, so shifting gears a little bit, the office market continues to feel the impacts of the pandemic and the rise of remote work. Now, businesses appear to be downsizing their office footprints, and there's still a massive amount of sublease space on the market. So when do you think the office market will begin to right-size?
Well, we're beginning that process now, and there's not just one office market. There's a multitude of office markets, and I think that the office market office markets that are most dependent upon a large number of their workers commuting via mass transit are probably in the toughest position right now. Those tend to be the densest office markets. And those are probably the ones that are going to take the longest to bring back the bulk of their workers. The other thing that we're seeing is that a lot of the creative industries that had been gravitating to a lot of funkier type office space, either warehouses that had been reconfigured into office space or new space that was built to mimic many of the characteristics of warehouses. We're seeing a further move away from that. Folks are realize that a lot of workers in the creative parts of the economy want more flexibility in their workspaces. There'll probably be more folks working from home in those creative industries. And that's where we're seeing a great deal of consolidation in the office market. And that's where we're seeing that office users put space back into the sublet market. And I think that's going to continue. And then there's the suburban office market, which is seeing new life. And the suburban office market was fairly weak prior to the pandemic, but with so many people wanting flexible work schedules, we've seen an increase in demand for suburban office space. And that market's likely to see a good bit of investment come into it over the next couple of years.
So office workers are starting to go back into the office, and that's helping fuel a rapid rebound in the apartment market as tenants rush to secure leases on favorable terms. But looking beyond 2021, how do you see apartment demand holding up?
Well, it's interesting to see how quickly leasing came back. This spring, we saw that leasing came back very rapidly, and it came back in some of the markets that had been impacted the most during the lockdowns. Longer term, the apartment market still looks pretty good. We've got all the Generation Z workers entering the workforce. They're coming into the workforce at a very good time where the demand for workers is incredibly strong. And so I would think that we would see very strong demand for apartments for those workers. And we've also seen that a lot of companies are surprisingly insistent upon their workers returning to the workplace. And so I think a lot of folks that were thinking that maybe they were going to be able to work remotely from some very enjoyable distant workplace are suddenly finding out that I'm going to have to be in the office a good bit of the time, and I'm probably going to have to rent a place closer to work.
Yeah, that definitely seems to be the case. So, Mark, thanks for joining us, and thank you all for tuning in. Please visit wellsfargo.com/economics for much more insights on commercial real estate. Thank you.